Hi, and welcome to this morning's early global view. It's currently 8 a.m. U.S. Central Time on Thursday, April 14th, 2015. Coming to you a bit later than usual because we wanted to let the impact of the latest U.S. numbers, weekly jobless, but most importantly CPI, work their way through. And what is glaringly apparent is that we still have a Yellen put in place after weak factors, international weak factors we'll discuss again in a bit. This morning the equities were trading a bit lower prior to release of CPI. CPI came in weaker than expected. Well, guess what? Based upon that being less of an incentive for the Fed to hike, the equities went from lower to higher. Actually up to what is a new high for this overall rally, and we'll get back to that shortly. So we have to ask, what has all this meant to the markets? And here we are shortly after 8 a.m. and the S&P is trading up 3 at 2079. Now remember, this whole 2075 to 85 is a particularly important longer-term resistance, and it's back into a major downward channel and some hefty congestion. Even if it were to trade above it, though, try to break up out of that channel, which we'll take a closer look at in the intermediate-term charts in a moment, it does have further resistance up into 2103 to 2110, going back to the late part of last year when it was topping out before the debacle in January. So overall, this is going to be a very important zone, and if it gets out above it, it's ostensibly on a fresh up break, but you always have to take that up breaks at elevated levels with a grain of salt and see if they really perform. But we noted throughout, every time the market held back into the 2035 to 32 range with only a bit of slippage last week Thursday, a week ago today, below it temporarily, it was ready to go at least back up to 2060, and unless it was a fail, not just 2035, but the bigger supports down in the 2020 to 10 range, it was, the bears weren't changing the trend. It was likely to go higher, and that's exactly what we got as of yesterday's opening. And that's pretty much it for the short-term view of the S&P 500.